Good morning, everybody. It is the last day of the month of August. Second month of the third quarter is out of the way, and everybody's expecting the third quarter GDP numbers to be at least 3%. Harvey's going to impact those numbers. It's going to make some changes. It'll take away from them for the month of September, but it'll add back into it October, November, and December. So my guess is the economic impact of Harvey will be discounted. We'll start with our disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. That is a mouthful, isn't it? I'm going to leave today about 11. I'm going to turn it over to Pat. Pat will run it. Pat's natural time frame is a bit longer than mine. So you'll have Pat for this afternoon, Friday and Tuesday, and you ought to pick his brains about looking at longer term trades. He does a lot of good work with a profile on weeklies and monthlies. And for those of you that naturally have a little bit longer term time frame or want to take a nice swing trade, pay attention to what he says. He can help you out with a profile analysis with that. That said, let's get into today's trading. Tomorrow is the non-farm payroll number, the unemployment numbers, and my guess is based on the third quarter GDP and this week's ADP number that they might revise it up, but they're looking for 180,000 in job gains. So people are expecting the economic growth to start to accelerate. So that tends to hold the market in a trading range. Got pretty good support down here. You can see it at 24 to 28. And right now we've got really good resistance, say at 8 to 12. And we're currently at 02. A sell at 7, picking up yesterday's high, would be ideal. Don't know if we can get there, so we'll make the first sell at 3 to 7. Second sell, 11 to 15. On the buy side, play for a little bit lower. We've got a B here. We have a B yesterday. 25.29. 17 to 21. Now we have news today that normally moves the markets. We got personal income up 0.4. Personal spending up 0.4. That will be the focus out of all these numbers. Core PCE up 0.2. Chicago PMI will play a little bit. 58.6. Pending home sales plus 0.4. And nat gas inventories plus 33B. The focus will be personal spending, followed by Chicago PMI, followed by pending home sales. And that'll do the news for the day. The news overnight, China's service PMI was well below the forecast. German retail sales were lower. Japanese housing starts were lower. Italian unemployment was up. So the economic news that I saw overnight, contrary to what the zero hedge says, and it was lean negative, did not lean positive. But the zero hedge write-up says that stocks are higher because of the improving economic numbers, which means they're still looking at this week's GDP and ADP numbers as far as the U.S. is concerned, based on what I saw in the overnight news. Okay, number one resistance is 24.28. Sell 31s to 03s. 7 to 11s. I see a trading range. We are in the December contract today. You're sitting there looking at a 55 handle as opposed to a 56. You can also trade the December contract if you wish in the 10-year note. Not get in trouble. 12 to 16 number 1, 5 to 9 by 1, 29 to 01 by 2. This is the December contract, that's why the numbers are different. Gold got hammered. They said fat finger trade last night. Was probably more than a fat finger trade. Took us down to 1302. We were set to sell anyway, and we've since come back. So our 5 to 7, which is where we were last night, could have been filled in the Asian markets. So we've got 14, so make it 13, 15, sell 1. We'll bring it in a little bit. 18 to 20, sell 2. Picking up that level and picking up that level. On the buy side, London's low was 8. Bottom of value is 7, so we'll go for a value area low play, buy 1, 5 to 7, 1300, 1302, buy 2. Some rumblings and grumblings out of Europe about the strength of the euro and what in the heck are they going to do to get their export business up outside of the EU. It never dawns on them to cut rules and regulations, but that's why supposedly this market is off. So 70 to 80, sell 1. 119 even, sell 2. Buy side, I think we're headed down, so 1825 to 35, buy 1. 118 even, 118.10, buy 2. It's really funny when currencies are going against the economic policies of a particular country. The politicians always say, well, we can't do anything about where our currency is. Right. But it's just amazing how the pat answers, the canned speeches, are the same round the globe for people that really do more harm to the economy than good most of the time. They're never at fault. They're never at blame. They're never held accountable. Contrary to the what happens in the private sector. In fact, in the private sector, most people would be in jail for what politicians get away with. Okay, I don't think it's a lot different than last night. So 25 to 50, sell 1. 75 to the buck, sell 2. 50 to 75, buy 1. 45 even, 45 and a quarter, buy 2. They'll be looking for builds in crude for the next couple of weeks and draws in products, significant. And yesterday afternoon, the hurricane hit Wichita. Gasoline jumped from $2.20 a gallon to $2.60. And I imagine we'll be seeing $4 gas before this is over in some parts of the United States. One time I paid $63 to fill up a tank of gas. Gosh, I forget when that was. Maybe back first part of first term of Obama's administration. I forget what caused it. Yeah, I remember him talking. We don't mind the high price of gas, just wish it hadn't gotten here this fast. Didn't affect his lifestyle, obviously, to make a comment like that. And his energy Treasury Secretary was also of the same mind. We want higher gas prices. We just don't want them to come this quickly. Causes economic imbalances. And okay, here we are at 60. We've got a seller at 65, so 64, 66, sell 1. 69, 71, sell 2. On the buy side, 55, 57, buy 1. Just leaning against support and resistance, that's all. 50, 52, the idea, probably a trading range because of tomorrow's non-farm payroll numbers. Personal income up 0.4. Spending up 0.4. That's what they'll pay attention to. Core PCE up 0.2. Probably won't get a look today. Chicago PMI 58.6. Pending home sales plus 0.4. And nat gas inventories plus 33 BCF. Personal spending, Chicago PMI, pending home sales will be what the market looks at, in my not so humble opinion. After my crude call yesterday, tell you what, that is a great way to keep your ego in check. Try to guess the close in crude. You'll find out that you're not so smart. I wonder why I do that every day. I've got to go out and regenerate myself, my emotional capital at the close of business, at the close of crude, damn near every day. And don't like to do that, of course. So it's going to take a bit to get everything up and posted. Going to get busy with that. Back with you as soon as possible.